Hi guys! Enjoy John's analysis.
$67,000. That is where Bitcoin is trading right now. Down from $82,000 in May, down from $126,272 on October the 6th, 2025. And in the last 48 hours, three things happened simultaneously that are sending holders to their phones, to the charts, to crypto Twitter, looking for an answer to one question. Is this the moment I should be worried? Here is what happened. First, US spot. Bitcoin ETFs just recorded 11 consecutive trading days of net outflows, the longest withdrawal streak since the products launched in January 2024. Total capital pulled, approximately $3.45 billion in 11 days. That is not a number you ignore. Second, Strategy, formerly MicroStrategy, the single largest corporate Bitcoin holder on Earth with 843,706 BTC, disclosed in a June 1st Form 8K SEC filing that it sold 32 Bitcoin between May 26th and May 31st. The first Bitcoin sale the company has made since December 2022. 32 Bitcoin, $2.5 million, against a treasury of $63 billion. The math is a rounding error. The symbolism hit the market like a hammer. Bitcoin slid towards 71,000 within hours of the filing. More than $93 million in futures liquidations in a single hour, 95% of them long positions. Third, oil broke above $93 per barrel as tensions in the Strait of Hormuz escalated. Treasury yields moved. Options markets began pricing a 68% chance of a Fed rate hike by year end. The same week, the S&P 500 is hitting record highs. Nvidia up 6% in a single session. Bitcoin is falling while everything else is going up. And if you are holding Bitcoin right now, that divergence feels different from any prior correction in this cycle. Here's what I want you to do in the next 35 minutes. Not panic, not sell, not make any decision at all. I want you to sit with 6 questions. Hard questions, the kind that do not have comfortable answers. And answer them honestly about your own position, your own protocol, and your own conviction. Because the holder who answers these 6 questions, clearly, in order, with data, will look back at this moment in 12 months and understand exactly what it was. The holder who skips the questions and acts on how this feels will not. Stay until the end. Because the 6th question is the one nobody in today's coverage is asking. And it is the one that actually determines whether the next 30 days cost you or pay you. Before we get into the questions, pause for 1 second. Drop a comment right now with one word. When you saw the strategy headline yesterday, when you read Saylor sells Bitcoin for first time since 2022, what was your immediate reaction? Panic? Shrug? Or you just watched the price and felt sick? One word in the comments. I will tell you at the end of this video what your answer reveals about your architecture. Now, 6 questions. I want to describe the person who needs this video today. You held through the FTX collapse in November 2022. You held through the recovery. You watched Bitcoin move from 15,000 to 40,000 to 80,000 to 126,000. You felt what that number meant for your future. You did the math, and then the cycle turned. Bitcoin pulled back from the all-time high. You held through 69,000 in March. You held through 73,000 when the dark pool trade hit. You held through the 7-day outflow streak becoming 9 days, then 11. And now it is $67,000. Saylor just sold for the first time since 2022. AI stocks are breaking records while Bitcoin bleeds. And a voice somewhere in your mind, the voice you have been ignoring for weeks, is asking whether this time is actually different. That voice is not weakness. It is your brain doing exactly what it was designed to do, detecting pattern breaks and raising the alarm. The question is not whether to listen to that voice. The question is whether you answer it with data or with emotion. The Kraken FOMO and FUD survey, conducted in October 2024 across 1,248 participants, found that 81% of crypto holders have made decisions based on fear, uncertainty, and doubt, and 63% said those decisions negatively impacted their portfolio. Not the decisions made at cycle tops, the decisions made exactly in moments like this one. Drawdown, negative sentiment, a headline that confirms the fear. Today is that moment. These are the 6 questions. Question 1. What does the on-chain structure actually say? Right now, today, not what the price says, not what the headlines say, what the 4 signals that have historically defined where Bitcoin sits in its cycle say. Here's the current composite reading as of June 2nd, 2026. NUPL, net unrealized profit, SHAS, loss. NUPL measures the aggregate ratio of unrealized gains to losses across the entire holder base. A reading above 0.65 historically marks the distribution zone, the territory where cycle tops have formed. A reading below 0.25 historically marks capitulation, Current reading, approximately 0.24. Per new hedge live data today, NUPL sits at 24.27%, just at the boundary of the anxiety zone, approaching capitulation territory, not in euphoria, not in distribution, in the zone that has, in every prior cycle, preceded the largest accumulation windows before the next phase begins. The Bitcoin Holder's Bible documents this precisely. NUPL below 0.25 is one of 4 conditions that, when combined, have historically identified confirmed cycle bottoms. MVRV Z-score. The MVRV Z-score compares Bitcoin's market capitalization to its realized capitalization, what the market values Bitcoin at versus what holders collectively paid for it. When the Z-score exceeds 6 or 7, the market is historically overextended. When it approaches 0, the market is at or below aggregate cost basis. Current reading, approximately 0.59 per live data. That is less than 1/10 of the 6 to 7 readings that have preceded every major cycle top in Bitcoin's history, 2013, 2017, 2021. At 0.59, the MVRV Z-score is not flagging a top. It is flagging a market that is trading near fair value with significant room before reaching historically overheated territory. LTH SOPR. The long-term holder spent output. Profit ratio measures whether Bitcoin moved on-chain was sold at a profit or a loss by holders who have held for more than 155 days. A reading below 1.0 means even the most convicted segment of the market is realizing losses, capitulation territory. Per live data today, LTH SOPR sits at approximately 0.819 below 1.0. Long-term holders are selling at a loss. That is painful data. It is also, historically, one of the strongest signals that the market is in the final stages of a drawdown, not the beginning of a structural collapse. RHO-DIL ratio. The RHO-DIL ratio measures the balance between conviction capital, coins held for 1 to 2 years, and speculative capital, coins held for 1 week or less. A high reading means old coins are sitting still. Speculative sellers have already left. Current reading, 1,829.74 per live data. For context, the 2 prior readings of this magnitude, in late 2022 and late 2015, both preceded sustained multi-year bull markets. The composite signal profile today, on UPL approaching capitulation. MVRV Z-score at fair value, 1/10 of historical top readings. LTH SOPR below 1, long-term holder pain. RHO-DL elevated, conviction capital dominant. This is not the signal profile of a market in structural collapse. This is the signal profile of a market under maximum short-term pressure with intact long-term structural foundations. The answer to question 1, the on-chain structure does not confirm a cycle top. It confirms a drawdown inside a cycle, painful, real, and historically consistent with what has preceded the next major phase of Bitcoin's history. Before we get to question 2, 30 seconds. Everything I just walked you through, NUPL, MVRV, Z-score, LTH SOPR, RHO-DL, is documented in full in the Bitcoin Holder's Bible. Not as theory, as a practical weekly protocol. A 5-minute check once a week that produces one answer, action or no action. The retail price for the Bible is $97. But because you are staying through this correction to look at the data, if you stay until the very end of this video, I'm going to hand you a $50 voucher so you can claim your copy for just $47. Stay with me. Question 2. What did Saylor actually do? And what does it actually mean? This question matters because the strategy sale is driving more sentiment today than any other single data point. So let us read it precisely. On June 1st, 2026, Strategy disclosed in a Form 8K SEC filing that between May 26th and May 31st, the company sold 32 Bitcoin at an average net price of approximately $77,135 per coin. Total proceeds, approximately $2.5 million. Purpose, stated in the filing, to fund distributions on preferred stock. The company still holds 843,706 Bitcoin as of May 31st, with a cost basis of approximately $63.87 billion. Let us put 32 Bitcoin in context. Strategy's total Bitcoin holdings, 843,706. Bitcoin sold, 32. Percentage of holdings sold, 0.0038%. If you owned 1,000 Bitcoin, this is the equivalent of selling less than 1/3 of a single coin to pay a bill. Tom Lee of BitMine Immersion said this morning that the strategy sale and the ETF outflows represent classic bottom behavior, the kind of noise that appears at market bottoms, not structural reversals. The last time Strategy sold Bitcoin was December 2022, also for tax loss harvesting purposes, also a tiny fraction of holdings, also followed by a market recovery that took Bitcoin from 15,000 to 126,000. Here is what the sale actually signals. 1. Strategy is managing competing financial obligations, preferred stock dividends, without diluting shareholders through new equity issuance. That is disciplined treasury management. 2. The company simultaneously raised approximately $1.44 billion through a stock offering during the same period and continued accumulating Bitcoin. These are not the actions of a company abandoning its thesis. 3. The symbolism exceeded the math because the market had priced Saylor as an unconditional buyer. The moment the doctrine of never sell was technically broken, even by 32 coins, traders who were leveraged long and waiting for any excuse to exit found one. The price reaction was a leverage unwind, not a fundamental reassessment. The answer to question 2, strategy sold 32 coins to pay a dividend. The symbolism hit harder than the math justified. Nothing about the underlying thesis changed. The company still holds more than 4% of all the Bitcoin that will ever exist. Question 3, why are ETFs bleeding? And is it structural or cyclical? 11 consecutive days, $3.45 billion, the longest and largest outflow streak in the history of U.S. spot Bitcoin ETFs. That is a real number that requires a real answer. Let us start with the mechanism. When an investor redeems ETF shares, the fund must sell Bitcoin to cover the redemption. The ETF outflow is not a directional bet against Bitcoin. It is the settlement mechanism for investor exits. The question is not whether the outflows are happening. They are. The question is why investors are exiting and whether the reason is structural or cyclical. The data points to 3 concurrent drivers. Driver 1, capital rotation into AI equities. The same week, Bitcoin is down 4 to 6%. Nvidia is up 6%. The S&P 500 is hitting all-time highs. Institutional capital is visibly rotating from Bitcoin ETF wrappers into AI and semiconductor stocks. Assets producing real earnings revisions and capital spending cycles right now. As Bloomberg ETF analyst Eric Balchunas has consistently noted, large outflow clusters in Bitcoin ETFs tend to reflect portfolio-level rebalancing decisions made at the asset allocation level, not judgments about Bitcoin specifically. Institutional allocators are rebalancing toward what is working in the current macro environment. Driver 2, macro pressure from oil and rate expectations. Brent crude breaking above $93 due to Strait of Hormuz tensions is an immediate inflationary shock. Options markets pricing a 68% chance of a Fed rate hike reverses the liquidity environment that drove Bitcoin's 2025 rally. Risk-free yields rising competes directly with speculative assets for institutional capital. This is not a Bitcoin-specific problem. It is a macro environment that is temporarily hostile to risk assets. And Bitcoin, despite its long-term structural properties, trades as a risk asset in the short term. Driver 3, leverage unwind. The liquidation data from the last 48 hours confirms significant leveraged long exposure was built up during Bitcoin's move from 65,000 toward 80,000 in late 2025 and early 2026. When price breaks support levels, stop losses and margin calls force selling independent of any fundamental view. This amplifies moves in both directions. Now the critical question, is this structural or cyclical? The prior comparison is instructive. Between November 2025 and February 2026, Bitcoin ETFs suffered through a $6.38 billion outflow streak that tested the conviction of even the most committed holders. Bitcoin recovered. The prior record for consecutive outflow days before the current streak was 8 sessions, which resolved with a sharp inflow reversal once the macro catalyst faded. The current cycle's structural demand drivers, ETF infrastructure, corporate treasury accumulation, sovereign reserve diversification, have not been removed. They have paused under macro pressure. Standard Chartered, despite the current weakness, maintain long-term targets this week. Morgan Stanley's Bitcoin ETF bucked the broader outflow trend on June 1st, recording a modest net inflow of $6.14 million. A small data point, but one that shows not all institutional flows are moving in the same direction. The answer to question 3, the ETF outflows are real and are creating genuine price pressure. The drivers, AI rotation, macro rate pressure, leverage unwind, are cyclical, not structural. The outflow streak is historically consistent with what has appeared at prior cycle correction lows, not cycle tops. Question 4. What is the macro divergence between Bitcoin and equities actually telling you? This question is the one that holders are finding hardest to answer today. Bitcoin is down 4 to 6%. The S&P 500 is up. Nvidia is up 6%. Global equities are at records. The instinct is to interpret this divergence as Bitcoin-specific weakness, a signal that something is uniquely wrong with Bitcoin relative to other assets. But the data tells a more nuanced story. Bitcoin has diverged from equities before, and the direction of that divergence has historically depended on the cause. When Bitcoin falls while equities fall, it is macro risk-off. When Bitcoin falls while equities rise, it is Bitcoin-specific flow dynamics. What we are seeing today is the second case, Bitcoin-specific flow pressure from ETF redemptions, leverage unwinding, and sentiment deterioration, not a macro risk-off event that would pull equities down too. This is actually important information for holders. A macro risk-off event, the kind that precedes prolonged bear markets, hits everything simultaneously. The fact that equities are rising while Bitcoin corrects tells you the selling pressure is internal to the Bitcoin market, driven by ETF mechanics and positioning, not by a fundamental shift in the macro environment that would make all risk assets unattractive. The AI rotation narrative adds another layer. Capital does not leave markets. It rotates within them. The same institutional capital that drove Bitcoin ETF inflows in early 2026 is now, temporarily, more attracted to AI equities that are producing visible earnings growth. This rotation has occurred between asset classes throughout market history. It is not permanent. And it does not represent a judgment that Bitcoin has failed as an asset. Bitcoin fell below 75,500 even as global stocks hit record highs in late May. And analyst Tom Lee was already pointing to that divergence as a signal of internal Bitcoin market dynamics, not macro deterioration. The current move to 67,000 extends that pattern. The answer to question 4, the divergence between Bitcoin and equities is Bitcoin specific, driven by ETF mechanics, leverage unwind, and capital rotation, not a macro deterioration that signals a structural bear market. When the rotation cycle reverses, the same institutional infrastructure that produced the 2025 rally still exists. Question 5. Has your protocol been activated, or are you just reacting to how this feels? This is the most important question on this list, and it is the one that most holders will answer dishonestly, not because they want to deceive themselves, but because this is the exact moment when the emotional state takes over the analytical process without announcing itself. Here's the protocol check for today's conditions. Signal 1, NUPL above 0.65? No. Current reading, approximately 0.24. The distribution threshold has not been crossed. This signal has not activated. Signal 2, LTH distribution rate above $500 million per day. The current LTH SOPR reading of 0.819 indicates long-term holders are selling at a loss. Capitulation behavior, not distribution behavior. Long-term holders distributing at scale at profit, the kind that precedes cycle tops, is not what the data shows today. Signal 3, MVRV score approaching 6 or 7? No. Current reading, approximately 0.59. The distribution alert range begins approaching 2, escalates at 4, and has historically coincided with cycle tops at 6 to 7. At 0.59, this signal is not active. Signal 4, SCCI sell signal generated. The stablecoin cycle. Index fired its sell signal on September 22nd, 2025, 14 days before the all-time high. That signal has not been regenerated. The SCCI is not currently in sell territory. The composite protocol answer for today, none of the 4 distribution triggers in the protocol have been activated. Not one. Which means, if you have a written protocol, today's price action does not require action. The headlines, the ETF numbers, the strategy sale, the macro divergence, none of them are protocol triggers. They are noise relative to the signal system. Now, here is the uncomfortable mirror. If you do not have a written protocol, if you have been navigating this cycle with conviction and knowledge, but without pre-committed signal-based decision rules, then today you are making decisions with your emotional state as the tiebreaker. And the Bickett 2024 behavioral study found that written plans reduce strategy deviation by 60%. Not because written plans are magical, because the act of committing decisions before the emotional pressure arrives eliminates the moment of crisis discretion that produces the worst outcomes. The holder who built their protocol in neutral conditions, before the ETF outflows, before the sailor sale, before the $67,000 price, already knows what to do today. The answer is nothing. The protocol has not triggered. The holder without a written protocol is navigating this with a voice in their head, and that voice is currently being shaped by 4 to 6% daily losses, record ETF outflows, and the first sailor sale in 4 years. The answer to question 5. The data shows no protocol activation. If you are considering action today without a triggered signal, you are reacting to sentiment, not data. Question 6. What is being completely ignored in today's coverage, and why does it matter more than everything else you have read today? Every outlet covering this story is focused on the $67,000 price, the 11-day ETF outflow streak, and the strategy sale. All of that is real data that deserves attention. None of them are talking about what the holder base looks like right now, because while ETF wrappers are bleeding, while leverage longs are being liquidated, while sentiment is at its worst point since the February 2026 lows, the actual Bitcoin holder base is doing something very specific. It is not moving. Exchange balances are declining, not rising. On-chain data shows long-term supply continuing to age. The RHODL ratio, at 1,829 today, reflects a holder base dominated by conviction capital. Coins that have sat through the entire drawdown from 126,000 are not moving to exchanges. They are sitting. This is the structural signal that every piece of today's coverage is missing. The BYDFI on-chain analysis published in May 2026 documented something critical. The Q1 to Q2 2026 period represents only the fourth time in Bitcoin's 15-year history that 5 of 7 core glassnode metrics simultaneously flagged bottom formation behavior. The 3 prior instances, late 2015, late 2018, and mid-2022, each preceded rallies of 300% or more within 18 months. We are in the 4th such convergence. Let me be specific about what that means and what it does not mean. It does not mean Bitcoin cannot go lower from 67,000. It can. The macro environment is genuinely hostile right now. Oil at 93, rate hike probability at 68%, AI equity rotation drawing institutional capital. All of these are real headwinds that can extend the drawdown. It does mean that the structural holder base, the conviction capital that has held through every prior downturn, is not capitulating. And historically, when that base holds while short-term players exit, it has created the conditions for the next major cycle move. Here is the specific data point that makes this concrete. Strategy alone accumulated 257,000 Bitcoin in 2024. The 6th halving, which has already occurred, produces approximately 40,880 Bitcoin annually. That means Strategy's single-year 2024 accumulation was more than 6 times the total annual Bitcoin production post-halving. The supply dynamics have not changed. The halving schedule has not changed. The fact that 566 Bitcoin per day are aging into ancient supply, while only 450 are being mined, has not changed. The ETF outflow streak will end. It has ended before. When it does, the buyers re-entering the market will find a holder base that absorbed the drawdown without moving their coins. The answer to question 6, the signal being ignored in today's coverage, is the holder base behavior. While sentiment collapses and ETFs bleed, long-term holders are not selling. That structural foundation, documented by on-chain data, consistent with every prior bottom formation pattern in Bitcoin's history, is the most important fact about the current market. Let us go back to the comment you dropped at the beginning of this video. Panic, shrug, or sick watching the price. Here is what your answer reveals. Panic. And you do not have a written protocol. The data today does not justify panic. If you are panicking, you are operating on sentiment, not on the 4 signals that define where Bitcoin actually sits in its cycle. Your next action is not to sell. It is to build the system that makes panic impossible the next time a day like this arrives. Shrug, and you either have a protocol that confirmed no action today, or you have conviction without data. If it is the first, you are in exactly the right position. If it is the second, the shrug is 1 bad week away from becoming panic, because conviction without a system is just comfortable certainty until the pressure gets high enough. Sick watching the price. This is the most honest answer on the list, and it is the signal that your architecture has a gap, not your conviction, your architecture. The gap between knowing what to do and being able to do it under pressure is not an information gap. It is a system gap. The holder who is sick watching the price is usually right about Bitcoin and wrong about their own ability to hold it without a pre-committed protocol. Here is what the data says about where we are right now as of June 2nd, 2026. Short-term pressure, real. 11 consecutive days of ETF outflows totaling $3.45 billion. Bitcoin at 67,000, down from 82,000 in May. NUPL approaching capitulation territory at 0.24. LTH SOPR below 1 at 0.819. Long-term holders selling at a loss. Strategy selling 32 coins for the first time since 2022. Macro headwinds from oil, rate expectations, and AI equity rotation. Long-term structural signals intact. MVRVZ score at 0.59, 1/10 of historical cycle top readings. RHODL at 1,829. Conviction capital dominant. 5 of 7 core glassnode metrics in bottom formation territory. No distribution threshold signals activated. Supply dynamics unchanged by the halving. What the protocol says, no action required. 0 of 4 distribution triggers met. What the system says, hold. You stayed until the end. Here's what that says about you. You are the holder who wants the data, not the reassurance. That is the right instinct. The regular retail price for the Bitcoin holder's Bible is $97. But because you invested your time to get to the end of this breakdown, you proved you are part of the group that wants architecture, not excuses. Go to the link below right now and use the voucher code I promised you. Diamond50, all caps. DIAMOND 50. That code applies your $50 voucher directly to your cart, bringing your total investment down to just $47. Let me put $47 in context with today's data. The holder who looks at 67,000 reads the 11-day ETF outflow headline, sees the strategy sale, and decides to exit without a single on-chain signal confirming that decision is making an emotional judgment. Historically, that exact mistake costs retail holders an average of 40 to 80% of the remaining cycle gains. We are talking about thousands of dollars left on the table. Here is everything the Bitcoin Holders Bible gives you: the complete on-chain signal framework, UPL, MVRV Z-score, RHODL, LTH SOPR, with the specific thresholds that define each signal's activation state, exactly as I walked through today's readings. The distribution ladder with 3 pre-committed signal-based rungs. Rung 1 is capital recovery. Rung 2 is significant profit realization. Rung 3 requires convergence of 3 simultaneous signals, the same framework the SCCI fired on September 22, 2025, 14 days before the all-time high. The Never Sell Core worksheet, the percentage of your position you define in writing in neutral conditions as the amount you hold regardless of price, narrative, or market events. Today is a market event. The Never Sell Core is not a protocol trigger. The weekly protocol check. 5 minutes, once per week, 7 questions, 1 output, action or no action. The exact check I just ran live on this video in question 5. 6 composite holder profiles, including Sarah, who built the system and distributed near the top, and Marcus, who held with conviction and sold at 64,000 in March 2026 without a signal because the pressure became unbearable without a framework. The security framework. Because between 1.5 and 2 million Bitcoin are permanently lost due to inaccessible private keys, data from Chainalysis and River Financial 2025 research, and the holder who builds the protocol but not the custody plan has left the most fundamental gap unaddressed. The inheritance documentation framework. Because the holder who gets there and cannot pass it on has not finished the work. The system that protects you from that mistake and keeps your architecture bulletproof costs just $47 today. The code is Diamond50. The link is in the description and pinned in the comments. Before you close this video, 1 action. Open Glassnode's free tier right now. Find NUPL. Note the current reading. Open macroeconomic. Find the MVRV Z-score. Note the current reading. Write both numbers down. Date them today, June 2nd, 2026. Then go back to your comment from the beginning of this video. Panic, shrug, or sick. The gap between the number you wrote down and the feeling you described, that gap is exactly the size of the system you still need to build. If you want the complete framework, the distribution ladder, the Never Sell Core, the weekly protocol check, and the full signal reference with historical context, the Bitcoin Holders Bible is $47 today with that Diamond50 voucher code. Link below. Subscribe so you do not miss the next video. And if this breakdown gave you something concrete today, share it with one holder you know who is watching the price right now instead of the signals. All data in this video was verified on June 2nd, 2026, the day of production. Sources are listed in the pinned comment below. See you next time.